This is Mastering Your Wealth with David Gagnon, the podcast.
President Trump, he had a lot to say prior to the inauguration. At the inauguration, he had a lot of promises he made on the campaign trail. I just wondered, now that it's real, are people calling you going, okay, now that this is real, I'm concerned about this, or I want to make a plan about this? I mean, what's kind of the vibe as far as now we have a new president actually in the White House?
Well, I mean, there's still a lot of unknowns as to what's going to change, and I think taxes are always on the minds of many people, the market, retirement planning, as far as should they make the decision to retire now or see what happens, and is it a good thing to do or bad? I mean, the bottom line is there's going to be always change in your life, whether it's related to taxes and the markets and your employment. I just think people need to put a plan together that takes into account the good and the bad that might happen and build it so that you have some control. When you invest money, the markets, you can't predict what's going to happen, and there's speculation both sides of the table whether the market's going to do well in the coming year or not. And I think with a good strategic plan, you can put airbags on your money and you can have it both ways. You can actually protect your money if the market doesn't work out in your favor, or you can capitalize on the market if it does well. And we use tools that are so different than mutual funds and what most people are really invested in. And that's why I think it's important for folks to get another perspective of what is possible in making better financial decisions by getting a second opinion. We give people the opportunity to reach out to us to do a complimentary, very comprehensive forecast analysis, but we kind of peel back the onion on some of the things that they might be doing with their investments to see if that investment plan is truly aligned with their risk tolerance, their financial goals and objectives, and lowering the risk. I mean, we do an analysis in detail on their investments, and we're finding that people are exposed to way more risk than they need to take to achieve higher yields, more consistency. And that's the key. It's what you don't know that hurts you more than what you do know. And so this is what we want to do. We want to educate people first, identify what they're presently doing, look into the future with how that might look. And now we can identify the problems that lie ahead, whether they might run out of money or they're going to pay too much in taxes or they can't meet their spending goals because inflation might be a problem. And we stress tested at different levels of inflation and taxes. So I think it's important to get a better awareness as to what you're doing, get better clarity is if you're on the right track. And if not, we see that. And now we can put together different strategies, different makeup of your investment structure so that it's truly aligned with what your needs call for based on the analysis. I mean, we make decisions based on logic and rational thinking through a lot of evaluations that we do.
Now, you mentioned inflation here. I think we've all been kind of living this nightmare for so long, and then you have interest rates on top of that. Well, interest rates have started to fall, but very slowly. Vanguard is telling its clients to get out of cash in favor of bonds. So, David, is this something that you're talking about with your clients, or walk me through this?
Well, quite frankly, we don't use bonds or bond funds because there are better alternatives. And these are alternatives that a lot of people aren't aware of. Bonds, when you look back to 2022, the bond funds especially, they're driven, and the value of those bond fund share prices are going to move in relation to the bond interest rates out in the market. And a lot of those funds had bought bonds prior to that point in time when the interest rates in the bond markets went up, when the bond yields were at historical low yields. And when the bond rates went up, people saw their bond funds losing money. And we did some portfolio analysis for people that reached out to us that year because they got hurt not only in the stock market, but also at the same time in the bond market. And people were down significantly in their investment plan. And what really opened up the eyes for some of these folks we did these portfolio analysis reports for was their bonds lost quite a bit of money. In many cases, it was double-digit losses. And they thought that was their stabilizer in their investment plan, but they didn't understand how bonds could be impacted in a different way and what kind of risk is associated with the movement of interest rates. So what we were able to show them is how do you do things differently and do what the wealthy people do. We use the tools and the strategies that the wealthy have access to because they're working with firms that, in many cases, you have to have a big investment portfolio to even have access to those tools and services. We don't require that. We're independently working on a customized plan, and we have access to these types of tools that are bond fund alternatives or bond alternatives and we're going to use things that are income type notes. And these yields are significantly higher than bonds. They pay interest monthly. They're 1-year maturities. And they're a nice way to stabilize your portfolio in conjunction with your other stocks or your other part of your portfolio that might be invested in equities. And you don't have to sacrifice yield to have better stability in your planning. And so when it comes to interest rates and income planning, or just investment planning in general, we use different fixed income alternatives that have yields that are ranging. Like this past month, we just bought yields that on notes that were 8.5% to 10.5%, 1-year maturities. Think about that. Mm-hmm. And they start paying interest 1 month after we buy those. And so we incorporate these types of tools into an investment plan strategy, and more importantly, into an income distribution plan strategy, because we know what the yield's going to be, what the cash flow is going to be. And when you get higher yields, you can really design a broad, diversified portfolio where you may not need all your dollars creating that income because we're getting higher yields on the income component. We can put a portion of your plan in something that's going to be earmarked for longer-term benefits and features, whether it's inflation protection, so we have better growth, or healthcare protection. There's all kinds of strategies that we can use those other dollars for. And so we do things differently. And this is what the advantage is when people get that second opinion we just talked about, because they're going to see things that they never even knew existed because it's not in their face.
Yeah,
you know?
Yeah, exactly right. Yeah, sure.
Yeah. So if you want to get different results, you got to do things differently. And think about it. What's the definition of insanity?
I was just going to say that, doing the same thing over and over again, expecting, different results. Obviously, it's the same result. We want to get you out of that hamster wheel.
You do so by first identifying what isn't working, expanding the opportunities through education and evaluation and validation. This is what we do when people reach out to us. And now when you can quantify the data of what you're currently doing and look into the future with how that's going to look, and then quantify the data with a strategic, personalized investment plan strategy, now we can show you the advantages and the benefits that you create by doing things differently, using different tools, different strategy approaches, and having a real plan. Most people I see, I have yet to see somebody with a customized strategic plan design. And a lot of people say, yeah, I got a plan. I've been saving into my 401k for the last 30 years. I said, that's not a plan. Mm-hmm. That's a tool. And so when you have a plan that's designed, that plan will identify what tools you should be putting your money in, what types of investments you should be putting your money in, and when and how to use it. So I just think, a lot of people are still complacent. They're comfortable. The market's been doing relatively well for a number of years, and people don't tend to make better decisions until they hit their financial, emotional threshold of pain. Right? You know what that is.
Absolutely.
You get to a point where you're getting beat up so bad, and all of a sudden your portfolio just hit that negative point, and the value that it dropped to that just sparked the nerve that now you start thinking, I got to find a better way. But don't wait till that time, because we can avoid that or prevent that from happening with a good plan. Don't wait till you're in a bad position and now you emotionally react to that. Let's be proactive, because when you're proactive, now you don't have to be reactive during these other times when it's very painful, because with good planning, that could have been prevented.
Real quick, David, I want you to kind of sum up here, because a lot of what we talk about is how you do things differently. You have different tools. You have different strategies. What makes you different than those big house names we know about or some guy down the street? What makes you and First Financial Planners different in how you plan for retirement?
We take a very broad, comprehensive approach to look at all the moving parts in your financial situation. Now, there's a lot of components that you want to make good decisions on. And being independent and coming from a tax background, one of the unique things that we bring to the table is tax planning strategies. And not by deferring your money and paying taxes later, but looking at where do you take advantage of the tax code and integrate the financial world to that tax code, that it gives you the greatest advantages to save you taxes in the future and take better control. But being independent allows us the opportunity to look at all your financial situation and decisions you need to make, whether it's how do you finance a car that works in your best interest? How do you finance and pay off your home? How do you fund your retirement correctly? What about questions when it comes to relocating? What are the tax implications if you're going to sell and buy a house and all those things? And what we find quite often when people do come to us for a second opinion and they're working with advisors, they're not getting the answers to this stuff. And it's important because, especially in the area of Social Security claiming, I find that when we do a personalized Social Security claiming report, and people who've already made decisions, they made some costly mistakes. They didn't even know they made them, but their advisor couldn't help them. They just turned on their Social Security when they retired and thought that was going to help replace some of their paycheck. So what we do is we do a very clear analysis, looking into the future, what you're presently doing, and we do put a lot of time into it, and it's complimentary, but we do so because I know people aren't getting this help. And when we can show people what is working and what isn't, and then educate them on a plan and show them some of the things that are in their blind spot that could give them better control and a higher probability of financial success. Now they get engaged. They see the value of what we bring to the table because of all this data analysis and evaluation. And so once we get to that point and we can show the value and the opportunities that we can create for people with better planning, that's where they become a client. They see that it's worth working together, and now they have a coach in their back pocket, and we're with them long term for as long as they want us there or as long as they're alive to keep them on a plan and a track of success. So I just encourage those who aren't getting that type of assistance with their planning decisions.
Are you feeling your age? I think a lot of us are, especially when I get up in the morning. I can tell it takes me a little bit longer to get my day going. What about you, David?
Well, I get up early, and I got to have that first cup of coffee before I go to the gym. That once I have that first cup, then I'm good to go.
Yeah, coffee. It's one of the most important meals of the day. I totally get that. Apparently, comedian Brad Upton, he feels our pain as well.
I don't know about you people. Life for me now is just a series of events reminding me I'm getting older. Anybody else? That's all my life is now. I was at the mall the other day in the food court. Several very attractive women walked past me. I realized I was staring at their food.
There are things as you get older, you start going, wow, my whole perspective of life has changed. But, food that looks good can sometimes disappoint, right? You go, man, that looks amazing. And then you order it and you go, this is not what I thought it was.
Yeah, that happens occasionally. It's funny, the other morning I was down the gym and there was a guy that I know there. He's there every morning. And he just had a week off from New Year's, and he was in there. And he's looking at me as he just got done with a set on one of the machines. He goes, I was just going to turn to you and complain about how, my body has all these new aches and pains and nothing's healing. I said, you're preaching to the choir. You're not getting any sympathy from me.
Yeah, wrong place to complain, buddy, in the gym.
So you just realize, I got to go to talk to some younger guy.
That's right. That's right.
That has no issues.
Young blood. Yeah, exactly. Well, in retirement planning, some options may look appealing, but they may not deliver what you need. Think about this. I mean, David, there's got to be stories you've had about clients who have brought in an idea that they thought was great. Maybe somebody else sold them this idea that was just, breathtaking. And then at the end of the day, it turned out it wasn't that great.
Oh, my gosh. I have so many of those situations. Probably the big one that stands out over the years are people taking hot stock tips from their best friend or somebody at the water cooler. I've talked about one situation in previous radio shows where somebody took a gold stock tip or ETF tip. I forget where they invested, but they lost over $1 million of their money, which was about pretty much 90% of their liquid investments. And you just have to really understand where you need to put your money and why you're putting it there. And a lot of people will buy things because they have features that look really appealing. So in many situations, I'll have people that come in with, say, for instance, annuities, and they might have an income rider on it. And I'll ask them, I said, well, this is great. I mean, these benefits are great if it's going to be something you're going to really need and actually use. And I asked them, I said, did the person who sold you this decide and determine that this was the right fit based off a plan? They said, no, they didn't do any plan. They just said this is good. And I said, well, how do they know it's good if they're not doing any planning for you to see what the benefits and the needs call for in your long-range objectives with your money? Because, when we do that, when we look into the future with what you're doing today, we can determine if you're going to have some problems, whether you run out of money or you pay too much in taxes. But here's the thing. You need a plan to identify how your investments should be aligned with your personal short-term and long-term goals and objectives. Because I've done portfolio reviews and these forecast analysis on people with a lot of money, and now they have these annuities that have income riders that they've been paying fees for that they will never use that income rider for because they have plenty of money. They don't need a guaranteed lifetime income. And so it's like you're putting the cart before the horse if you invest your money without any plan, because your money's going to end up in the wrong places for the wrong reasons and not be a good fit for what your needs call for. And that's going to create more risk than necessary because your money's not really working in the areas it needs to create some value and benefits. And so this happens a lot. We always make this analogy. If you were to build a brand new house from a hole in the ground all the way till it's finished state, would you ever think about doing that without a set of plans? You would never do that.
No, exactly, yeah.
You're not going to get the house the way you envisioned it if you're not following a plan that's got all the design specifics and know exactly what to order and all the materials, because you're going to waste money. You're going to make a lot of mistakes along the way, and you're not going to be happy with the outcome. So the world of finance really has to work off of a plan. And that's why we invest a lot of time and effort when we get to work with folks, and we do that high-level review first. We do that high-level review because I got to see if we can really help you and if, in fact, you're doing okay without us. And so, like I always say, it's what you don't know that hurts you more than what you do know. And so don't buy on the sizzle. If somebody's selling you something, you don't want to be sold. You never want to be sold something. You want to invest because you're investing for a reason and a purpose. And you can get to that with a plan that will identify how you should invest your money and what different tax types you should accumulate it between taxable, tax deferred, tax free, so you're tax efficient in the future. And then when you are getting closer to retirement, do you have a strategic income plan that's going to generate income without the risk of depleting principal, and also have backup contingency investment allocations to offset inflation in the future, and maybe healthcare? So you can see there's a lot of moving parts before anybody should make any decisions on how and where they should invest their money, and you need that plan first.
For more details or to sit down with David for your complimentary financial GPS, visit masteringyourwealthradio.com.
Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims-paying ability of the issuing company and are not offered by Brookstone. Structured notes involve risks not associated with an investment in ordinary debt securities. The securities are not bank deposits and are not insured by the Federal Deposit Insurance Corporation or any other government agency, nor are they obligations of or guaranteed by a bank. The securities will not be listed on any exchange, and secondary trading may be limited. Therefore, there may be little or no secondary market for the securities. Accordingly, you should be willing to hold your securities to maturity. The securities are subject to the credit risk of the issuing bank, and any actual or anticipated changes to its credit ratings or credit spreads may adversely affect the market value of the securities.
David Gagnon is an investment advisor representative of Retirement Wealth Advisors, LLC, an SEC-registered investment advisor. First Financial Planners, Retirement Wealth Advisors, and WICC are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered financial advice or a recommendation to buy or sell any financial vehicle. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future result. Investments will fluctuate and when redeemed may be worth more or less than when originally invested.